Infinite banking relies on the tax advantages given to whole life insurance and specific policies that life insurance providers apply to their participating whole life insurance contracts. Some of those policies vary from one provider to another. Of great importance and benefit to the owner of a whole life policy that is to be used for infinite banking strategies are the riders that are incorporated into the design of the policy. So, what are riders? Which riders in particular provide the greatest benefits, and exactly how do those riders affect the accounts? Well, those are the questions that I will answer in this video. I hope you will find this information to be helpful and beneficial to you, and I hope you will subscribe to this channel and share it with your family, friends, and associates. Aloha, I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the managing director of the Hawaii Financial Freethinkers Academy, a nonprofit financial literacy education organization. For the past several years, I've focused on and specialized in the infinite banking concept and developing the tax-free cash growth warehouse finance strategy. Again, if you find this to be helpful, please like this video, subscribe to this channel, and share it with your family and friends. Also, please post your questions and comments here. You have questions, we have answers. So let's get to it. What is a rider? Well, obviously, a rider is someone or something that rides on something else. A passenger in a car is a rider. A barnacle on a whale is a rider. An egret on a cow is a rider. A hat. Well, you get the idea. So, regarding insurance policies, a rider is an added component that provides a specific additional benefit and that is added to the base policy for a specific purpose. There are several riders available to be added onto a base whole life policy, such as long-term care, guaranteed insurability, waiver of premium, critical illness, paid up additions, and various kinds of term riders. It's the last two that I mentioned, paid up additions and a term rider, are the ones that offer the greatest benefits to the owner of a life insurance policy that will be used for the infinite banking strategies. And that is what I will be explaining here. Real quick, for the use of infinite banking, the preferred whole life insurance policies are those available with mutual providers. That is, they are companies owned by the insurance policy owners and not stockholders. And they are participating policies in that they participate in the profits of the company by means of dividends. So, what do these riders do, and how do they benefit the owner of the policy? First, as I said, mutual insurance companies offer participation in profits by means of dividends. And those dividends, along with guaranteed compounding interest, is paid to the cash value of those policies. So, cash value is going to grow within the policy with or without any riders. However, a whole life policy by itself will not gain any cash value at all in the first year of the policy. Then the cash value will begin growing in the second year of the policy, but very slowly at first. This is because the insurance has a cost. It isn't free. So the premium paid in the first year goes entirely to pay for the insurance. Most of the premium paid in the second, third, and fourth years, etc., also go to pay the insurance. But a little bit starts to go into the cash value of the policy, and that's where the compounding kicks in. When that happens, the cash value begins to grow faster faster until about the 13th year of the policy. And that's when a kind of magical thing happens. All of the premium you pay in the 13th year or so is equaled by the amount of compounding dividend interest that gets paid to your cash value. And from there, it continues to compound, and more is paid into your cash value than you are paying into the premium for the policy. When the paid up additions rider is added to a policy, it has its own premium, which is added to the total premium for the whole life. And every time you pay the premiums for your policy, that paid up additions rider buys a little chunk of whole life, which gets added to the total of your life insurance face value, otherwise known as the death benefit. One and the same, face value, death benefit. So every time you pay your premiums, you get an increase in your life insurance, but your premiums stay the same. The premium does not increase, even though you now have more life insurance and you are getting older. And those are two of the biggest factors in determining the cost of premiums for your policy: age and the amount of the death benefit. And that's a really good deal there, but there's more. Remember that the premium paid for the paid up additions is a separate premium. It's included in the total you pay, but it's actually a separate premium. And most of that paid up additions premium goes straight into your cash value, like 90% of it. So if you pay $1,000 premium for the whole life, zero of that goes into your cash value the first year. But if you pay $1,000 premium for the paid up additions rider, $900 of that goes into your cash value. And if you think about it, that means that you actually only pay $100 for that $1,000 of paid up additions that gets added to the face value of your policy. And actually, around $3,000 of whole life gets added to your policy for the $1,000, while $900 gets added to your cash value. That is just ridiculously good for you. And don't forget, that's $900 of cash value that you don't get from the whole life-based premium. And that makes a huge difference in the speed at which the leverageable cash value grows for you. Now, what value does the term rider add for you? Depending on the provider, the main thing that the term rider provides is a larger amount of life insurance face value at a lower premium than the same amount of whole life will require. So you get more life insurance for a lower premium. Another benefit is that with the larger total life insurance amount, the MEC limit is raised. Real quickly, MEC stands for Modified Endowment Contract, and the MEC limit is the maximum amount allowed to be paid into your life insurance policy in 1 year without losing the tax-free gains benefit. So a larger or higher MEC limit gives you the option to be able to load in more cash value, which increases the compounding tax-free growth of your cash account. Now, as a general rule, term insurance has no cash value itself at all. However, there is one insurance provider that actually puts about 90% of the premium you pay for the term rider, included in this policy construction, into your cash value. This is huge. It's the only term insurance of any kind, anywhere, that contributes to the cash value of your policy. And of course, from there, it compounds along with the rest of your cash value. So now you can see that in the very first year with this particular provider and with those two riders, the cash value of your policy grows much more robustly. And in this case, if the premium paid for the paid up additions rider is $1,000 and the premium for the term rider is $1,000, even though none of the premium for the base whole life goes into your cash value the first year, $1,800 of the $2,000 in premiums for those two riders will be in your cash value right away and growing tax-free with the compounding dividend interest. Ta-da! So those two riders have a major effect on your infinite banking account. One, immediate cash value to the account. Two, lower premium for greater face value benefit. And three, a higher MEC limit, allowing you to load in more into the cash value to compound in your cash value account. Pretty stellar stuff. Please like this video and subscribe to this channel. Do you have questions? We have answers. For a more complete explanation of the tax-free cash growth warehouse strategy, you can watch our free 60-minute webinar. The link is in the description box below. The link to buy my books on Amazon.com is also below. And if you'd like to book a free phone consultation with me, the link to my Calendly page is also below. If you'd like to apply to become a client of ours, the link to the application is also below. We're here to help, and we look forward to helping you. Aloha and mahalo for watching.